Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I'm delighted to welcome Raj Tekchandani to our show. Raj is a technologies veteran from New York, Boston area, and I have networked with him on many conferences. He's a mutual friend that we speak a lot. His amount of knowledge and expertise that he brings from a data and a sort of a technology perspective is always appreciated. And we kind of always network and talk about, what things are coming on the horizon. And he's kind of a thought leader on some of those initiatives as well. So thank you for taking time, Raj. I appreciate it. How about get us started in terms of your background, Raj, and how you kind of came into real estate?
Sakar, first of all, I really appreciate the opportunity to be on this show. Really, I've enjoyed listening to your show, and today is a great opportunity to share my views.
Thank you.
So, yeah, my background is, you briefly mentioned, is a technology background. I'm an undergrad in computer science. Wanted to build the next Facebook back in the day, and very excited about all these new technologies. Came to the US, now it's been over 30 years, to pursue my higher studies and work. Have been in technology most of my career, right? Very fascinated with the startups. So I had done a bunch of startups. Some of them were good. Some of them they went bust.
Sure.
But all along, my fascination for data had remained. The power of data.
Sure.
And my last startup, we were building a data fabric, data lake. There's a technology company, so building a platform for that. And my role almost became from pure technologist to a sort of an evangelist. Because
Sure.
a lot of these newer technologies were hard to explain to people. So I took on that path, got my MBA along the way, and became like a passion evangelist for data-related products and technologies. 2012, I bought my first condo. Accidentally happened. My friend who was investing in real estate said, "Hey, have you looked around what's going on in the property value?" I said, "Yeah, I've been paying attention to some of the, but never, thought about buying one because, we had a home that we lived in, which is, but interestingly, I took a trip down with him to Orlando, and I looked at the property values and I was like, oh my God, this is crazy.
Sure.
And I had some money sitting in the bank. So I said, I take a risk and buy this first condo. Lo and behold, I bought that for $34,400 something.
Wow.
And the prices had come down crashing. I said, how bad can this be? And as I bought that, it was already rented out. That was my really first flavor of, I was like, this is great. And the cash flows just started coming in. And I was like, this is way better than any other investment that I've done. So I bought another one. And I also saw the prices were climbing up. So I said, let me just, lo and behold, I bought 9 condos in the Orlando area, and touch wood, they've all been doing well. The property has been appreciated, and I don't remember maybe over 2 months of vacancies across those 9 condos. It's been so great.
Wow.
But it came along with the whole idea of managing multiple properties, managing through an asset manager. At the end of the day, there are like 9 bills to pay and whatever.
Sure.
And I had been reading along the whole concept of multifamily investing, right?
Sure.
And this is interesting, how much data is out there, how much research you can do. So I got excited about the multifamily and bought my first multifamily 2016 or 17 here in the Boston area. Property just happened to be, down the street from where I live, but the neighboring town, which is, I knew was not a great town, but it was upcoming because it bordered our town. And this property happened to be on the better side of the town. How there's two sides of town across the railway tracks. So I had the faith in the gentrification of that area, again, based on some data analytics and the under rent comparison that I've done, and the kind of income that people could derive from people living there, the tenant profile. So I bought that on with some, but again, it was also learning experience. And I can go more onto board. I just want to stop there and
No, I totally agree with you. I think the sort of the technology, the data piece right now is so important. I mean, every day we are learning of new tools, and the data itself is so important. And uh, just the whole fabric of multifamily in general is so much central that we want to pay attention to, what sort of swing in the markets is happening.
Yeah.
And the more you can stay ahead, or may rather stay close to the current data, that is, in my opinion, is what helps us. And you can go either way, and the more you are closer to some of these metrics is what kind of shapes your, let's say, the philosophy or some of the niches that you can go by and things like that. So I can perfectly relate to that. And going back to your multifamily story, Raj, help us complete that. Like, what was your experience like? Was it more like a smaller multifamily, or let's say if some viewers are listening and they want to be interested, perhaps, how would you say that? Were the rents were, sort of lesser than the prevailing market and things like that? So was that sort of the upside you saw, and you kind of purchased those?
Absolutely. So I think clearly, like I said, it was the rents were low, and it was a 15-unit property, all 2 bedrooms, 1 bath. And I could see that the rents are going to come up on that area. A little bit of upgrade was needed.
Sure.
But it's an older property, and what I didn't realize at the time was, and my underwriting skills were still coming up to speed.
Sure.
And now I would have caught a lot more things. So the experience was good in terms of managing it, all these 15 units or 15 under one roof. So one bills, common bills to pay.
Sure.
But it had its own challenges. I mean, and very much required a property manager that was more savvy than I am. I'm not a property manager by any chance. I mean, I rely on property managers, expert property managers. So we uncovered a lot of things that were not listed in the P&L that we got to T12, mainly because the previous seller had his relative doing the property management.
Sure. And if I may ask you in between there, Raj, I assume that it was a vintage building, perhaps 70s or before.
Oh, no. This is way older than that.
Okay. Makes perfect sense.
Way older than that. So
let's talk about some of that stuff as well, Raj. Is that the vintage buildings, right? Or perhaps some of them are historical ones as well. I mean, a lot of Northeast. You are in Boston. I am in Maryland as well. A lot of sort of housing stock here in Northeast in general, I like to say, is that it's mostly built in, like, let's say 40s, 50s, some in 30s, 20s as well. And it obviously brings in a whole set of new challenges. This is not like a typical garden style multifamily that we see. You have sort of unique level of construction, the mechanical, of course, the foundation and things like that. Could you maybe help us understand some of those aspects in your
Oh yeah, I mean, like I said, there's this, like, they had these heating boards in everybody's room, and the control was in one of the units. So we tried to say, okay, we put a lock on that unit, and there is the basement was in bad shape, and the plumbing is older. So you have to, and this, the systems are old. I mean, they were not tenant friendly. So in terms of that, we didn't want people to go down there to the basement. So we had to secure some spots and make sure that it's people don't go down there, make it more secure, make it more safe for kids. So there's a lot of work to be done that in these days. If you look at a newer property, some of them you don't even have to think about those things.
Sure. No, I totally agree with you. I mean, you got to worry about there's enough ample access or egress and things like that. Whether you have decent space for washer dryers and things like that. So there's just, I mean, having myself managed many of such properties, you can tell that I kind of see some of the telltale signs. There's as you alluded to, I think there's a lot of uncovered issues also that you notice. Now, moving on, how was your first large multifamily experience? So, like, how do you kind of shifted to the larger multifamily side of the house?
So interestingly, alongside when I was doing my whole research on multifamily or learning about my self-education, which I highly encourage all listeners to do. I mean, you should absolutely, either you're passive or active, definitely get educated.
Sure.
I had a friend from high school who was doing this, and he actually brought me a deal to say, do you want to invest passively? I said, sure, let me take a look at it. But when I looked at it, he explained to me it was like 300 units, and there was like large numbers of digits. Like I talk funnily and said there were too many zeros for my comprehension.
Sure.
I said, how do you even do this? I mean, this is impossible. I mean, we have lived in apartment complexes, but never thought of owning an apartment complex.
Sure.
Yeah, duplex, fourplex, even 15 unit is manageable, but how do you do 300 units?
Sure.
So introduced me to the world of syndication, right? And how it's done, how you raise money from private markets and our public retail investors. So that was my first experience to saying no to that, right? And I said, I can't do this. Then I went back to learning more about it. And when I got comfortable of, understanding how do you invest out of state, what data metrics you have to find out. So all those things about job growth, income growth, data that we analyze now, I started looking at that again in a big way and, following some of the large syndicators as how they do it. And then I said, okay, this is interesting. Now I'm ready for passive investment. So let me find a deal. So I went back to the same group of investors that I had declined first, and they were doing another deal, this time in Georgia. And I did that, and I did another deal that was also in Georgia, 2 deals in there, Georgia. And got very comfortable with the whole idea of passive investing. And I said, this is what I want to do. And at the same time, I was finishing up my 5 years in the startup, the tech data startup that I said.
Sure.
And I wanted to do another startup in technology. And at that point, I decided whether I want to do that or should I do this full time.
Sure.
Since now I had built some, equity and cash flow. And cash flow was very, very enticing to me. So I quit my W-2 to do this full time.
Interesting. Very nice. Very nice. I think the fact that you said that, hey, you first studied the space rather than just kind of jumping in and, trying to figure things out is, I think that should be, bold and underlined there, is that know the sort of space first, educate yourself as to what you're getting into, and then first decide. Would you agree?
Absolutely, 100%. Even, when I got into more of active investing in, raising capital for some of our deals, I actually started with an education platform. I mean, it started with 4 people and me buying them chicken biryani to, come and listen to me. And that kind of grew from there. Like we had monthly meetups and, I was talking to more on the podcast circuit is how this education, self-education is so important.
Absolutely.
Yeah, so that meetup group became a very interesting group for us because I kept it small. It was very education focused and it was very focused on apartment investing. Because I had seen a bunch of other meetups around in the Boston area and they were talking about wholesaling, flipping, and I couldn't get to a meetup that was exactly what I needed to attend. So I said, I'll create my own meetup. From the 410 people, now we have almost 700 people in that meetup.
Incredible way to take action. So now, speaking of markets, right, those are some of the sort of the basics that we say that, hey, could you maybe help us understand, like for passive investors, how important it is, like, let's say if someone is presenting your deal, what are some of the first elementary things that you advise for passive investors that they should check on?
Yeah, absolutely. So I think I actually, shameless plug here, but I actually wrote, e-guide on that. So what to look for before you make a passive investment, 99 questions to ask. Or basically, I talk about, there's different categories of what you have to look at. And sponsorship team is one. Absolutely, you have to look at who the sponsor is. And then we go into markets. And within the markets we talk about, 15 elements or 12 elements that we should look at. The population growth, the economic diversity, the income growth, even, how prone is it to weather conditions. Then we look at, some of the STEM jobs. All those factors go into understanding what the market is. And, if there is only one anchor industry there, that could be hit. I mean, a lot of industries we know in these COVID times have been hit. And if everything was based around an airline, imagine what happened, right? Or a cruise.
Absolutely.
It would have been hit bad. So we go for mixed diversity of, jobs and all those things. So a lot of things to look for those in markets. Yeah.
Absolutely. Couldn't agree more. Now, speaking of capital raising, educating your investors and things like that, let's talk, Raj, about how do you go about it? Like, what sort of, you mentioned you have your meetup, right? Could you maybe help us understand, like, how you're spreading the word, how you're networking with more newer investors and things like that?
So I'll take you through the journey of the last 1 year in 5 minutes. Let's say if we can do
Sure.
it.
Mm-hmm.
So like I said, I started with a smaller meetup. It was purely educational, and it was basically introduction to multifamily. So multifamily 101 or syndication 101.
Mm-hmm.
And I did that for multiple groups over time. And then that became very popular. So people who came to the meetup asked questions about it, and then they got more comfortable about it.
Mm-hmm.
And more they got comfortable, more their interest grew in passive investments. So I used to share what kind of investments we are doing with them, or what we have done in the past, and how
Sure.
they have worked. Things that did not work for us, right? I mean, we were in a deal that did not go through because we found something in due diligence. So important of
Sure.
due diligence.
Absolutely.
All those things, when to back away from a deal, what to look for in a deal. And that meetup kind of like it grew. And like I said, between that meetup and the podcast, and then I said, you know what, I'm doing this again and again and again. So why not write some, e-guides to do that? So I wrote,
Sure.
3 or 4 e-guides just to do that. And then towards end of last year or early this year, I created an email course. It's like a 8-day email course that talks about all that. I call it the 8 pieces of pie.
Sure.
Pie standing for passive investor education.
I see.
So, yeah. So over the last couple of months, over 150 people have gone through that course, and
Awesome.
they come back and they ask more questions. And so it's basically raising awareness of, what it is. And I never talk about this as capital raising. I say to you, hey, if you understand this, this is an opportunity for you to
Sure.
invest alongside us in our projects, as an opportunity for you. Like, repeat that again. To diversify. To diversify.
Sure.
It's like,
Sure.
a lot of people have been investing in the stocks and bonds and, pure markets. And it's just a way to diversify yourself. And along the way, they learn about the benefits of real estate, the tax advantages, all that other stuff. So that's how we do it.
Absolutely. And I totally agree with you. I think everybody knows the public markets, right? I mean, everyone will talk about the stocks and things like that, but never ever people understand, like, these are the sort of the blind side, or perhaps the sort of the club side of investing, where, once folks and can help us present the deals, I think the world of opportunity is there. I think, as you alluded to, like, a lot of high net worth individuals are looking for hey, a solution for tax. I mean, they have the sort of the disposable income that they can say, yes, we want to invest, but how can I save myself into taxes and things like that, right? So give us some themes, Raj, as you have networked with investors, right? Some of them are pretty sophisticated, some of them are not that savvy, right? What are some of the top few things you have to kind of reiterate to people? Is it the deal? Is it like sort of, let's say, the sponsor, or is it something you're talking about markets more and more? What are some of the few basic things you have to keep on iterating to passive investors?
So I think as in my email course, I start off with, what your goals are, right?
Sure.
It's very important to align your goals with your investments.
Sure.
So if you're closer to retirement, you want, something that is capital preservation.
Sure.
If you're younger, maybe you want to take more risks, and, you want cash, and maybe you want more cash flows right away, and you don't want much of equity. So all those things, once they are clear, they align yourselves to either, you want to, and again, these are illiquid investments. I mean, know that. So, making sure that people are not investing their last dollars right into it.
Absolutely.
This is money that they can put aside for 4 or 5 years.
Sure.
That's very important to know. And some of that is, nicely regulated by SEC, by the guidance of, that you can't take these monies from everybody and anybody. So which is good. So yeah, I mean, a lot of that education, a lot of that, pointers around taxes. Again, I'm not a CPA, but through my, educational platform, I also have a webinar series. So I invite, CPAs and tax guys and cost segregation guys to talk about, why real estate is a great vehicle that people have not known about. Maybe.
Absolutely. Couldn't agree more. Now, as we are going through the COVID times, Raj, more and more focus is getting drawn into how are the existing assets performing, right? And that goes back to your topic of passion, which is data, right? Like, are the rents on time? Who's impacted? Who's not impacted? Is there enough turnover in the units or things like that? Can you maybe talk about, asset management is a loaded word as you call, but there's just so many elements to it. Could you maybe help us understand, what are sort of some of those metrics, or perhaps what is some of the data that we are using nowadays to kind of uncover some of these things?
No, absolutely. So I think we do a lot of tenant research when we do our property buying. So sort of tenant profile, right? We look at what is the mix. Like I said, it's always good to have an economic mix and different kind of jobs, so that if one industry gets impacted, your tenant base completely doesn't get impacted.
Sure.
And that's why we look at some of the STEM related areas, right? So STEM, which is science, technology, those kind of jobs, right, are important because they tend to get less impacted in such times, and we have seen that through our investments. And more of sort of day-to-day workers have been impacted more. So it's very good to have a good tenant profile, and that is something we watch very closely, especially in these COVID times.
Sure.
I mean, we know that right now the stimulus package is on, and everybody's getting their stimulus checks, but we had to analyze again data to say, okay, what if these checks stop, right?
Sure.
What percentage of our tenant base is going to be impacted?
Sure.
So very good to know about all those things, and then maybe do we have cash reserves for that?
Sure.
Making sure the cash reserves are there just in case certain tenant profile is not able to pay, and we still have to meet our other requirements. So yeah, all that is very important, and then we all trying to see in these times how can we do more for using technology. I mean, virtual tours, all that stuff that is a lot of, you will see in a few months or near future, a lot of augmented reality, and all these things are going to come into play.
Absolutely.
People can sit in their room or in their house and imagine living in the different apartment and how that apartment look like. So a lot of that is going to come into being. Also, from a data perspective, very important to keep sense of your pulse of your tenant base, right? Your community.
Sure.
So what are they talking about in their reviews? To do a sensitivity analysis on that. Why is the sentiment this? Sorry, I meant sentiment analysis.
Sure.
So why is the sentiment what it is, right? And how can we change that proactively? What can we do for our tenants? We used to do a lot of cultural things to keep the tenants occupied and their kids busy. How can we use the COVID times to do that? I mean, what kind of virtual engagements we can do so that the tenant base is very important, is to keep your tenant base happy and staying there.
I agree with you. I think COVID has thrown a very interesting twist on things where, as you alluded to, I think, like all the sort of the neighborhood parties or the block parties in the apartments that have completely vanished. People are sort of indoors, and it's an interesting time that how do you hold sort of those virtual events? How can you maybe keep the engagement of your sort of the tenants properly? And as you alluded to, the word sentimental analysis is a very interesting term, that you want to understand what the emotions and what issues are happening, and perhaps the more you can keep them engaged, the better off you are. Now, speaking of all of this, right, through the COVID times, Raj, how do you think, do you think that as we go through the whole COVID pandemic, and of course it is still unraveling, do you still feel that there are few gyrations still going to come in the market, meaning you might still see some distress or some stress in the market? What are some of your thoughts around that?
I think we will see some distress, especially around, like I said, areas that have been impacted or will be impacted. We haven't seen much yet. I mean,
sure.
We haven't seen any major price drops yet. But I think they're coming. They're coming, especially in the areas that don't have the economic diversity that will sustain this COVID times.
Sure.
Fortunately for us, some of our properties have been in high technology areas, right? We haven't seen, and we don't anticipate much dip there.
Sure.
But the other areas in sort of non-urban places that you have the properties of other people have the properties, will definitely see an impact. Once the tenant base vanishes, the properties will have to take a beating.
Sure, sure. And I share your sentiment there, Raj, where I think sort of the tertiary markets, or perhaps markets who have like sort of one base, right? Let's say the business gets impacted, you certainly have more so the blue collar worker class will certainly start to see that stress. I mean, for example, right now we are sitting on a economy that's sort of floating on the base of stimulus, for that matter, right? But as all those things start to wane off, we will start to see a transition where perhaps, who's going really on an active payroll, or are their jobs being affected? So all of that, I think the dust has not settled yet. Let's put it that way, right? So in closing, Raj, what are some of the things you are looking forward to, like, as we kind of go through in the rest of 2020? Or perhaps are you looking at like more deals or more COVID resilient markets where you can purchase? What are some of the things you're looking forward to through rest of the year?
Yeah, definitely. COVID resilient is a good term, but I think we definitely look at markets that have a stronger technology focus, stronger medical focus. So, and being very careful about analyzing deals. So yeah, we are still looking at a lot of deals, but we're very, 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 very picky, more so than ever, and still making a cautious attempt whether to put an offer or not, because we know the markets would go down.
Sure.
But again, if we see in an area which is high tech area, jobs are coming up, population is growing, all the other signs are right, and we see a property that is under market rents, clearly for whatever reason, mismanagement or whatever in the past, we definitely like to jump on that.
Awesome. Well, you've been a great guest, Raj. I appreciate all the insights. I think the leadership through data and marketing techniques that you have adopted certainly have helped investors and a lot of other folks as well. Kindly share with the listeners, Raj, how they can find you and learn more about your services.
Absolutely. So easiest way is my email address, raj@smartcapitalmgmt.com.
Sure.
That's the website, www.smartcapitalmgmt.com, and just my email is raj@smartcapitalmgmt.com.
Incredible. Thank you, Raj, for coming on. For listeners and viewers of the podcast, premiumcashflow.com would be your destination to log on. We have lots of articles, recent stats, and of course, our podcast where guests like Raj are often on. So you can log in there. If you are interested in any private investments or want to learn more about multifamily and things like that, kindly register yourself. We can perhaps jump on a short phone call and see if we could help each other. And if you're interested in any other investments, that would be another avenue we can partner on. So thank you for Raj, and I look forward to talking to you on another future topics and another future podcast as well.
Thank you again for having me, Sagar. Thank you.
Absolutely.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.